So there's a high probability an XRP supply shock is coming. Tom Lee.
Underway. The Fed.
That's what didn't we hear about an XRP supply shock anyway at this point? We heard about XRP supply coming in. I heard about that as well. So that was pretty awesome, right? We heard a lot about XRP basically incoming big supply shock and everything getting sold on exchanges. But Tom Lee's talking about the whole crypto market.
ISM moving back above 50 because that'll boost employment.
So yeah, more rate cuts means more money.
The spread of mortgages to 10 years should fall, which should boost housing. And he's reducing the benefit of owning cash. It's getting less yield. And that's going to push cash off the sidelines, and that's risk on. So in a simple way, I think the three things to focus on would be Mag 7 and AI stocks, crypto, which is Bitcoin and Ethereum, and then interest rate sensitive groups like small caps and financials.
So I guess like because XRP is top 3, it can probably like move towards XRP anyway.
But I would say, you know, historically, the initial bigger effects tend to be monetary liquidity and the fact that cash is coming off the sidelines. Since the Fed announced its cuts, the leadership has come from crypto, Ethereum, and Bitcoin. That's very similar to what happened in 2024 when the Fed cut in September after an extended pause.
Something Tom Lee forgets, which I'm going to remind all of you guys about, is that XRP in September, when the Fed cut rates last year, absolutely exploded.
So yeah, 20 out of 21 times XRP did actually go up in price when these rate cuts happened, or at least historically. So that is what I'm excited about, guys. We are going to be seeing more historic data, and I can't wait to see it. Honestly, it's been absolutely amazing what XRP has done. But this is it. The more rate cuts we have, it's basically like checking boxes.
Way more than Bitcoin, way more than Ethereum did. And I think it's going to be no different this time around because XRP is perfectly posed to completely take over the industry. They're getting partnerships with BlackRock. They're getting tons of ETFs launched and so much more. But I digress. There's a lot of important things that Tom Lee talks about in today's video for you guys to look out for. Please listen closely. It's going to change your life. Let's get into the video.
To start this video by talking about the macro.
So yeah, Tom Lee is a billionaire, if you guys didn't know, and he's actually a very famous one because he's giving us free info on these projects.
Because the Fed easing cycle is underway. The Fed announced a 25 basis point cut on Wednesday, and it was dovish in my view because the Fed acknowledged not only is a future cuts coming, which is an easing cycle, but that he acknowledged that the inflationary pressures from tariffs was less than they were expecting. So again, more in the camp of transitory inflation. This is something that we had taken a view on over at Fundstrat, that we'd expected stocks to rally post-Fed. And we see that indeed there was good follow-through in both the NASDAQ and small caps, which outperformed the S&P. The NASDAQ up 1%. In the 24 hours after the Fed announced this cut, and small caps up 2.5%. Now you might wonder, will stocks continue to gain? And the answer in our view is yes. I'm citing some stats from Ryan Detrick at Carson Group, and he points out that when the Fed cuts within 2% of all-time highs, the S&P is higher 20 of 20 times, with an average gain of around 14%. Now you're going to wonder, what will outperform post-Fed? We just want to give you a simple framework. The Fed is dovish, and that's monetary liquidity. That should be good for risk assets. We also think the Fed wants CEO confidence to recover, which we would measure through the ISM moving back above 50, because that'll boost employment. The spread of mortgages to 10 years should fall, which should boost housing. And he's reducing the benefit of owning cash. It's getting less yield. And that's going to push cash off the sidelines, and that's risk on. So in a simple way, I think the three things to focus on would be Mag 7 and AI stocks, crypto, which is Bitcoin and Ethereum, and then interest rate sensitive groups like small caps and financials. But I would say, you know, historically, the initial bigger effects tend to be monetary liquidity and the fact that cash is coming off the sidelines. The leadership has come from crypto, Ethereum, and Bitcoin. That's very similar to what happened in 2024 when the Fed cut in September after an extended pause.
So yeah, after 3 months, which they cut in September, they might cut in November, which means the real pump might be in January, might be delayed. This is a very big possibility. I mean, don't underestimate that, in my personal opinion.
The stocks that are most correlated to Bitcoin and Ethereum are MicroStrategy, ticker MSTR, which gained 6% on Thursday. And Ethereum, most leveraged stock, is Bitmine, which is the largest holder of Ethereum in the world, and that gained 5%. Many of you might think markets are in a bubble because the Fed's cutting near all-time highs, but as we pointed out, that's happened many times, and 20 of 20 times stocks still gained after that. But I think the way to think of it is to think about Nvidia, which happens to be a granny shop. But as you can see, Nvidia's PE is 26.6 times. Now, do I think that's expensive? I don't. First of all, as you can see on this chart, it's in the middle of its range over the last 5 years. But keep in mind, Costco and Walmart trade at 48 times and 34 times earnings. These are far less scarce and unique than Nvidia. Nvidia is the most...
So yeah, that's when Nvidia technology is now taking over in the big pump. It's like just like kind of catching up really into the big markets, if you understand what I mean.
Scarce company in the world today because they make a chip that every AI company needs. So until Nvidia trades at the same multiple as Costco, I think Nvidia is not in a bubble. Well, in 1998, September 98, Cisco was at $16.55 times forward earnings. Why am I setting September 1998? Well, that's similar to 2025. The Fed was on an extended pause and then they cut in September. In the following 12 months, Nvidia went to $80 per share and its PE went to 210 times. So its stock went up 5x and the PE went up 4x. Now that's what I call a bubble. We're not there yet with Nvidia today at 26 times forward earnings.
So if Nvidia goes into a bubble in the future, that money has to go somewhere, right?
More importantly, look at sentiment. The AAII net bulls less bears is still negative. There's more bears than bulls at an all-time high. In fact, we've had 7 weeks now where markets have made an all-time high and yet sentiment is negative. You can't really say we're at the top if investors are bearish at the highs. So let's talk about granny stock performance. The top 5 performers of the past week are Oracle, Tesla, Vistra, Lam Research, and Palantir. Now, they're all AI related, but Oracle, of course, surged on good earnings, and Tesla is gaining because Elon Musk made a pretty big insider buy of $1 billion. The worst 5 performers were Garmin, Amazon, Robinhood Markets, Cadence Design Systems, and Netflix. Some of this is profit-taking, especially a stock like Cadence. And in terms of themes, the best performing theme was energy and cybersecurity, led by Palantir and Vistra, and GE Vernova, and labor shortage, which is Oracle, Tesla, and Lam Research. Seasonality also worked. Again, Oracle was flagged as a seasonal trade, as was Palantir. But Palantir has been a granny shot for a long time, as well as Oracle.
At this point, you guys should all know that the AI race in the blockchain industry is top of mind, and that's why you need to listen very closely.
I agree with that. Like, technology has, like, what has been stuff in the past now is technology just hit so much. And we saw the same in 1997 with the internet bubble, basically, that burst in 2001. But during that time, wow, the gains were amazing, right? So this can repeat at a smaller scale, and this is what really pushes XRP forward. And it already did with all these lawsuits. You know, guys, it didn't just pump because the lawsuit is over. It pumped really because people believe in the technology and the use case now that crypto can provide, especially now that it's regulated, and that's where it wins.
Closely to what I'm about to tell you.
Every day I look at what's happening with this.
So it's a very good video.
Tensor, and I draw all these parallels to the things I was seeing with Bitcoin back in 2012. I'm now seeing with the Tensor today.
Today's video is sponsored by NextGen.
So yeah, you get a guy's pretty clear idea of what Tom Lee is implying. He's implying that the old money, basically from the stocks, from the market, is going away while there's a new money coming in, which is, well, very much technology. And it's already showing up, but not at these rates. I feel like we're going to have another year, like maybe 4 years, another big boom cycle with technology, because technology takes a bit longer to consider.